Hi everyone, I am Smith Kauper, tax consultant from Meta Accountants and Consultants. I will be presenting the taxation advice for our clients, Alice and Albert in PNG for year ended 31st December 2024. In this video, I will walk you through the key concept, the simple calculations, and how each of the business and personal transactions are treated under tax law in PNG. You can see on the video presentation summary, all the business transactions, the events for both clients, Alice and Albert, are all calculated and simplified, and these are self-understandable. But a couple of transactions seem to be complicated, so I will explain you in detail for tax purposes, for now and in the future. As I've said, all the business transactions and events being mentioned are all simplified and explained in full detail. These are self-readable, but once that does seem to be complicated, I will explain, as I've said, for your tax purposes. For Alice, school fee for her children by her employer is a taxable benefit that is attached to her package. It is a taxable benefit under prescribed rule within IRC. Fridge benefit meaning it's a non-cash benefit, and that is attached to a package, and it is taxable as education expense under prescribed rule within IRC. Next one is stock adjustment. The closing balance of stock was 400 kina, and opening balance of stock is 200 kina. Once adjusted, it will give you the net increase of 200 kina worth of stock. That is a net increase, and that is a taxable income that is added to the business. Again, for Alice, there's another transaction seems to be complicated. I will explain you in detail. Again, for Alice, payment to her hand for bookkeeping worth of 6,000 is excessive relative to a market rate of 500 kina. That 500 kina is a deductible amount. It's allowable. And the excess amount, 5,500 kina, is disallowed. It's not deductible under related party rules set out by IRC for tax purposes. And that is for less, and now I will move on to Albert's business transactions for tax purposes. For Albert, 300,000 kina for consultancy service is a business income. Therefore, it is taxable. It is fully taxable to IRC. And supination payment of 30,000 is a valid business expense. Therefore, it is deductible. And for Albert's new computer, it is eligible for depreciation. And for the disposal of asset, deduct the carrying amount of 3,000 and at sale proceedings, 800 kina. Net loss of 2,700 kina is deductible. The accrued interest income, a total of 1,200 kina from a term deposit, was earned up to 31st December 2024. But that money was not paid immediately until February 2025. February 2025, Alice received the total of 1,300 kina as an interest. But out of that total, 1,200 kina was the accrued interest from 2024. And 100 kina is the interest earned in January 2025. And the total of 1,300 kina is a taxable income that she received. So that type of deposit, term deposit, is considered as investment income, and it is subject to personal income tax under PNG tax law. That is all, and thank you for choosing us.